Let's get right to our floor show. Joining me now, T3 Trading's Chief Strategic Officer, Scott Redler, and UBS Managing Director, Jason Katz. It's great to have you both here on set, by the way. Scott, let's start with tech. The big seven, as we call them. This has been the story for the rally. A lot of people have FOMO. They don't want to miss the tech rally. But now the word is overvalued.
We've been hearing a lot against the tech rally since it started in March. It's a broken bounce. It's a bear market bounce. But meanwhile, 20% off the lows. They still said it couldn't continue. And you know what? It's been strong, and there's been great rotation. You had mega cap tech, you had semiconductors. We've had actually some momentum names showing momentum, whether it was Tesla, whether it was Nvidia, whether now you have Apple at all-time highs. Apple's at an all-time high. That's not a broken bear market bounce. That's creating wealth, and it's been a great trade for traders. I do think, though, after that 7-day decline that we just saw, that some traders are trying to reshuffle a little bit to get more alpha, so they're trying to go more into the equal weight S&P. Some are looking to see if the small caps could play some catch up. So we might have had outperformance in tech. So now maybe we could have them continue, but there might be alpha elsewhere.
Well, I was going to say, there's some rebalancing going on, which Jason, I'm going to talk to you about. But we're looking at Nvidia. Back in May, you liked Nvidia, but a lot of question marks now about is that trade kind of over? Yes or no, real quick, because I
don't think it's over, but it's not going to go up as much as it did the last 6 months.
It was a nice run up. Jason, let's talk about the macro story. $4 trillion on the sidelines right now, and a lot of people have been sitting in cash, making money in cash, just because cash is paying better than it did a year ago.
5+%. I can't begin to tell you how many clients in the beginning of this year said to me, "Why don't we take some equities off the table? We could finally get a return on cash." And that's fine and dandy for your cash and cash equivalents, but look what would have happened in terms of the S&P relative to that 5% return on cash. The market's up, 25% off the bottom. Cash has been the most crowded trade. Now we're starting to see that money rotate, as Scott pointed out, into other parts of the market. S&P equal weight, small cap. And I definitely think that's where the second half you're going to see returns. I don't think people are going to abandon, per se, what took them to the party, but those 7 names, the S&P 10 is not what's going to take you home for the party. It's the S&P 490 that will.
Mm-hmm. Yeah, it also, too, Scott, you've been talking about GDP. We could have an economy that's getting 1 to 2%. GDP growth. I'm assuming that's in the second half of the year. So maybe recession's off the table, but
we've been talking about normalization. I think we spoke months ago when everyone's, are we going to have a soft landing, we're going to have a hard landing. I go, what if we just normalize? Get back to 1 to 2% GDP. Also, interest rates, maybe with a 4.5 to 5.5 ceiling instead of free money everywhere, which caused the inflation. So that takes time to work through. And at this point, we saw the economic numbers this morning. They're still strong. So all the talk about recession and slowdown, it's taking time to filter through. It's doing it slowly, but maybe we're just normalizing and consolidating a 10-year bull market in the past 2 years of sideways action that could continue. And I do think the S&P could probably make a new high in the next year or two. Probably not this year, though.
Well, yeah, and the labor market's been cooling, Jason, and we know that. But you seem to be in the camp that maybe this isn't going to really worsen too much more. We had thought we were going to see these, the job numbers coming in every month, and they were going to fall off a cliff, and they really haven't.
They've characterized the stock market as the Energizer Bunny, but it's actually the job market that is. Those that are getting laid off are easily finding new jobs. So this soft landing narrative is definitely back on the table. And what's diminishing is this hard landing that everyone thought was a foregone conclusion. It's the recession that never was. Now, let's not get carried away here. The fate of this market, truthfully, lies in the hands of a few individuals, Chairman Powell in particular. If they go another half a point, so be it. I think the market has discounted it. The question is, how long do they stay? And the longer they stay, the more likely we will get that recession. But again, and Scott made this point earlier, we just might have muted economic returns, not necessarily falling off the cliff, because we've had rolling recessions. So when the real one hits, it may be sort of a non-event.
Exactly. And how do you invest that way then? I think you both kind of agree here about what the second half of the year is going to look like. We had a guest on yesterday, Scott, that said, look, AI is everywhere. AI is in healthcare. AI is in consumer staples. AI is in, social media. Take your pick. So if you want to make an AI trade, Pick other sectors.
It could, like you said, it's everywhere. It's not just Nvidia. It's not just the symbols AI. It's everywhere. Meta's talking about it. Amazon's talking about it. Google's talking about it. Baidu came out today and said they have a better search. So I just think it's adding trillions to the balance sheet of a lot of companies. So it's adding to some of the juice to the stock market. So you don't have to be specific in AI. But you said, how do you invest? I've been trying to talk about multiple time frames. Okay, if you've been investing and putting money into the S&P every single month in a 401k, you're gonna win over time. That's 7% a year. The bull markets win. It's gonna happen. We just said I have a son who's 14. I have a 529. His name is Chase. Every month I'm trying to put money in there since he's 5. I started a little late. That's gonna hopefully pay for college. And then what we do is we invest for a living. So you have to be very specific. You have to know what's happening. You have to be watching you guys to stay on top of everything and see where the money's flowing. Money's been in tech. It's been very hot. As soon as everyone starts talking about the best 7 or 8, then it changes, like Jason said, to maybe the next 490. So you have to keep continuing to do your work.
Well, that's why people should watch Fox Business, Jason, is because we are going to be giving you investment ideas. And I think, we're at this inflection point now because, the first half of the year is ending, second quarter is ending. And, summer maybe you've got a low volume situation, but it's going to be, I think that we all thought that the second half of the year was going to be rough and it was going to be a tough market. And you've got the NASDAQ up 29%.
Well, first of all, everyone came into the year saying tough first half. We'll see light at the end of the tunnel in the second half. Everyone got that wrong. So I do think equal weight and I do think small cap, but I'll take it one step further. Instead of stocks, how about preferred stocks? Preferred stocks basically are like bonds. They're hyper rate sensitive, and the vast majority of preferred stocks are issued by banks, so a double whammy. That index is down 15%. You could buy that here, get around a 7% return, and if in fact we do have a soft-ish landing and we're at peak inflation and we don't have more SVBs or signature banks, which I don't think we will because these banks by and large are well capitalized, you can get this 7% return and a catch up from that 15% decline. So that's a little outside the conventional stocks and bonds. Somewhere rests in the middle is preferred stocks.
Preferred stocks. No, it's an interesting theme, I think. And we're all looking for different ways to invest in particular. Who thought that a money market account was going to look good? Right now it does. Scott Redler, Jason Katz, thanks to both of you. Appreciate it.
Thank you.
Good to see you both.
Yeah.